Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. So it's been a while since I've covered natural gas, took a little bit of a break from it just because I felt like, whenever I would buy, it would take a really long time to go up and then, just really sucked time out of positions, was an opportunity cost. So I've kind of taken a step back and I've just been trying to exercise more patience with it when establishing positions, whatnot. And so currently I'm not holding any natural gas positions, but I do plan on buying the dip if we do see more of one. But first, before I get into the ETF that does cover natural gas, specifically in this video, I'll be going over 2x leverage natural gas, symbol BOIL. But I just wanted to go over the natural gas chart here first. And so I am recording this on Friday, August 23rd during the market hours. It's around 11:30 Eastern right now. And so as I record this, we can see that the current price of natural gas has pulled back a little bit from this top that we saw here. It looks like it's pulled back around, 9% from the recent high. And, over here, it might have looked like maybe this is a bull flag, but we were getting wicks up suggesting there weren't buyers to push it higher, to hold it up. And, when we would see green moves, we would see, again, wicks up retracements. And, it has faded, as you can see. And so I wanted to go over where I think price could be coming to with natural gas and how this could be used as an indicator for picking up some shares of BOIL. And so I will go over the BOIL chart and kind of my thesis on that. But first, I wanted to draw some levels here. And so one thing you might notice is this green dashed line as well as this red one. Those are prior pivot lows. I just left them up here. I cleaned up the chart, but wanted to leave those on here because I do think they are significant. Also, I have the 2024 forecasted average, which I put up there at the beginning of the year, and we're a lot lower than it, unfortunately. But here, if we look at these levels, the red one corresponds to this low going back to June of 2020 and, start of the pandemic. And then this other pivot low here, the green line, that is from August of 2019. And it does look like, we wicked above that here. I had a few closes above it, a few candles above it, pulled back, and then, tested that level here as support before breaking through it over here and then testing it. Excuse me, I don't use TradingView that often as far as zooming in and stuff smoothly goes. But it does look like we tested it as resistance here, rejected, broke through, pulled back to it. And so I feel like that level might be of interest. That's right around $2.04. And I should note, forgot to mention it, that current price is right around $2.16. And so looking at the chart like this, the first thing that I like to do when I look at charts is do Fibonacci retracements to give me an idea of where price might be going to. And I'm not going to draw them exactly to the penny. I'm just going to do them approximately here, like from the low earlier in the year that we saw right around $1.60. And then going up to the highs that we recently saw. And okay, so looking at a few things on here, number one, because this is a retracement from the bottom to the top, this is going to be offering, levels that could be potentially acting as support. And so while we did break below this yellow line here, which is the 65% retracement, that represents the golden pocket going from there up to the 618. That is right around 204, corresponding with that green dashed line. We did break below that here, but then we did bounce. And so now I am wondering if that level, because we've had some consolidation below it, if that level might be acting as support now, as it does correspond with the green dashed line, does correspond with that golden pocket. So I find that pretty compelling. Also, this pivot high here, as I had mentioned, pivot high here as well. So I do think there could be a lot of support there. Some other things that I could look at, drawing up a trend line from the low over here, pivot low here, does look like, actually this is pretty interesting, we did break below that, and then we did pull back, pull up to it, test it as resistance, kind of fake out, break above it just now, and now we are breaking below it during trading yesterday, Thursday, when we broke below it, now trading below it today on Friday. And so I'm actually going to move this pivot point to the low over here and see where that could be, potentially offering some support. And it looks like by the end of September, that does seem to coincide with the golden pocket there, that 65% retracement right around 204. So I feel like there's a lot of confluence of levels, not only that uptrend, not only that prior pivot high and low that we've seen, the green dashed line, but also the base of that golden pocket at the 65% level. So I feel like price could still be coming lower. And so that would suggest that price could be coming down by about 5 more percent over the course of the next, month or, month and a half. So that is what I would look for with natural gas, still a pullback. And so I don't think it's the right time now to be buying the dip. Maybe we get a dead cat bounce up to, let's see, what level is that? The 50% retracement, that would be around 226. So maybe we see that, but then I would see a pullback to around 204 following that. And so with that being said, I am now going to switch over to Webull to go over the Boyle chart. This is the one I've been trading, the 2x leveraged. I had previously traded UNG, which is not leveraged, the ETF that goes long on natural gas. The reason why I decided to go with Boyle is because the thing that's nice about natural gas is it can be very volatile. And, with that being said, I don't really want to be in positions for a very long time, and I don't want to necessarily have big positions. I just want to be in and out. And so I think Boyle is a nice way to capitalize on that volatility, multiplying it by 2, and then, get in and out on that. Whereas, with UNG not being 2x leveraged, I'd have to be in it longer to make those gains, and it could just fade. And so in this video, I'm not going to cover UNG. As you can see, I have gone over it before. If you want me to, let me know in the comments. I'd be happy to. Like I said, I'm just going to focus on Boyle for this one. And with that being said, if you want me to go over cold, this is the 2x leverage short ETF of natural gas. I'd also be happy to go over that. So let me know in the comments. But so here, looking at Boyle, currently trading right around $9.15. I have done some more recent drawings on this because I did recently swing it from the lows over here up to the highs. I think I got out a little bit early, but I would have just spent a week or two just in this sideways price action with it fading lower. So, I'm happy I got out of that. Did make a nice trade, very small position, maybe 3 or 4 shares, but just trying to practice executing with natural gas. I don't want to be a victim to the Widowmaker. I want to be, the Widow Destroyer. So I was very careful with this. And with that being said, I am being patient. I'm not thinking, oh, this is a bull flag, it's going higher. I'm waiting for it to pull back. And so where could I see it be pulling back to? One level you might notice is the 618. That is actually from a Fibonacci extension, so a little bit different from what I've previously drawn, and that is at a price of 716, so coming down about $2 from current price. And so that level is based on a retracement from the top here that was hit on January 9th, coming down to this low here of March 27th. So that is the high here to the low here before this rally. And then so I extend it by taking that up to this high here that was hit on May 23rd, and that's how I get these levels. And so in Webull, you can draw that by going up to this Fibonacci retracement tool, but then clicking the down arrow and going to the Fibonacci extension. So that is how I've drawn that. And so looking at that, 716, I think I want to wait for $2 more of a drop. And then also considering this downtrend going from the pivot low from February 15th, as well as the pivot low from March 27th, just drawing it from those 2 points, we did connect with that level here when we hit the low of 813. I was able to capitalize on that and swing for, a small trade, but a nice trade, a green trade that I am now out of. I'm not having to suffer through the pullback that we're currently seeing. And so with that being said, I think 813 is a level to maybe keep an eye on natural gas if it does come down to that, to pick up some shares of Boyle. But really, I think it's better to be patient. I think it's better to wait for a pullback to this downtrend. I'm actually going to make that a little bit thicker so it stands out a little bit more. But I could see that level being tested when we get to this 618 at around 716 or maybe just $7, keeping it a whole number. And getting to that level might correspond with, a time frame of a month from now. In the middle of September, towards the end of September, is where those two levels do intersect. So I'm going to be on the sidelines until either we come down to around 7 or 716, or when we get to, about a month from now, because I think, the big thing with natural gas that I've learned is that it is definitely an opportunity cost to be holding this long term when it's just trading sideways for a while before the volatility. And so I think waiting a month would be a good idea before we start to see a bottom, a true bottom, and then we start to see some upside moves. And maybe, switching back over to the chart here, maybe we get up to that 2024 forecasted average of 350, which could correspond with a lot of volatility in oil to the upside since it is leveraged, maybe getting back to 24.72, the highs here, or perhaps even higher, like $40 a share. It's a 4x or more from now, but also I don't think it's good to be holding super long. Good to be in and out of trades, because I do think it is a trader's market right now, not a long-term holders market. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. And let me know if you want me to cover more stuff on natural gas. Take care.